Hi, I'm David Campbell with Coldwell Banker. Welcome back to another Difference with David video. Today I wanted to talk about buyer's agency, what that is, and do you need it? If you're a buyer, yeah, you need it. What does it mean? Just like it sounds, buyer's agent, they're representing you exclusively. So if you talk to an agent or start working with an agent that has the sign in the yard, they're the listing agent, they represent that seller. They don't represent you. They can do this thing called dual agency. They end up not representing either party. It can be a big mess. Look at my playlist for another video on dual agency. But the point is, you need somebody on your side, in your corner, that can help structure the deal for you, and somebody that you can trust to call, go look at houses with, that type of thing. That buyer's agent should sit down with you up front and have a buyer consultation. Go over a contract with you, go over disclosures with you, talk about your earnest money and how you could lose it and your inspections and that type of thing. I always give all my buyers a complete packet of the things they're going to be signing so that they can go home and check that out, ask questions, read through it, that type of thing. I always say that the first time you see a contract should not be when you're writing it. And I see that happens a lot out there. People have never gone over one. They find a house they like. All of a sudden, they got all this paperwork shoved in front of them. They don't know what to sign. They don't know what's going on. They just sign blindly. So educate yourself up front. And then lastly, if you get hooked up with a good buyer's agent, they should tour you through homes and show you the good and the bad. Okay? If you've got an agent that's showing you homes and there's never anything wrong with a home, that's a red flag, because there's something wrong with every home. And your agent should be there to kind of point it out, show you some of the pitfalls of this, that, or the other thing, whether it's a neutral point or a bad point or of course, the good stuff. I think I've saved my buyers over the years just thousands of dollars in wasted inspections and appraisals and things like that, from telling them up front, hey, look at this problem. We may not be able to solve this one easily. Maybe this isn't the best house. And, that people feel good about that. They keep coming back to me because of that. They feel like I have their best interest in mind. So if you have any further interest in learning about a buyer's agent and how that works, look me up. Be glad to sit down with you. And by the way, it doesn't cost anything to do that. All right? Talk to you later. Hope to see you soon. Bye-bye. Hi, I'm David Campbell with Coldwell Banker, coming to you with another Difference with David video, and this one's about down payment. People ask all the time, how much do I need for a down payment? A lot of people think they need 20% down. Well, that's from long ago. It's not needed anymore. But some people also confuse that 20% down with the minimum amount needed to get past PMI. If you don't know what PMI is, give me a call. But with FHA loan, you can do 3.5% down, conventionals 5% down minimum. And if you're a veteran, might be 0% down for you. So important thing to do is get your financing worked out before you find the house you like. I can help you with that. Give me a call, David Campbell with Coldwell Banker, and I make house calls. Hi, I'm David Campbell with Coldwell Banker. Are you a buyer that's had trouble getting a deal through? In other words, you keep getting outbid, or some reason you don't get your bid accepted? There's a number of things you can do to make your bid stand out. One of them in this tough market is what we call an escalation clause. If you've not heard of that, give me a call. In a nutshell, it means you can essentially outbid the next highest bidder. Give me a call. I'll explain how it works. Hello, I'm David Campbell with Coldwell Banker. Welcome back to my Difference with David videos. Today we're going to talk about earnest money. There's a lot of misconceptions there, and nobody likes surprises. Two things that I often hear is my earnest money check going to be cashed? It sure will be. It'll be cashed right away. It'll be put in a non-interest-bearing trust account. Secondly, buyers often assume that they're just automatically going to get their earnest money back if there's a problem. Not always the case. Real quick, here's the 4 ways that earnest money comes back out of the account once it's in there. First, closing. Get it back as a credit. Second, mutual consent of buyer and seller. So seller has to sign off before it comes out. If they don't sign off, the third way is court order, typically small claims court. Fourth way it comes out, seller doesn't make a request for that earnest money within 24 months, it automatically kicks back to the buyer. So it's not always straightforward. Give me a call with more questions. Thanks for watching. Hi, I'm David Campbell with Coldwell Banker, back with another Difference with David video, and I wanted to talk about PMI, or private mortgage insurance. People ask what that is, why do they have to pay it? It is a insurance charged by the lender anytime you're putting less than 20% down. It insulates them in case there's a foreclosure so that they can be protected. So the good thing to remember about it is it's not permanent. If you only have 10% down, you don't have to pay PMI forever. Once your loan gets to 78% of value, then the servicer has to terminate it. That wasn't the case many years ago. So let's say you find a house you really love, you don't have full 20% down. That wouldn't stop me from not buying it. I would buy it knowing that my PMI is going to get taken away eventually anyway. So I'd be happy to get the house I really wanted. FHA has something similar called MIP, or mortgage insurance premium. VA doesn't have anything they call insurance like that, but they do have a funding fee, and that funding fee is pretty heavy. It's usually 2 to 3% of the loan, and it helps to VA to cover losses and keep that program going and so forth. So if I can help you with any of this further, love to speak with you. David Campbell with Coldwell Banker. Talk to you later. Bye-bye. Hi, David Campbell here with another Difference with David video for you, talking about best strategies to win a bid multiple offer situation. First of all, make your offer nice and clean. Have your agent call the listing agent, see what the seller needs in terms of a closing date, possession. Are there any other particulars you can meet? You're not going to be typically asking for closing costs or home warranties or owner's title in this situation. You're trying to make your offer slick and clean and something they want to accept. Escalation clause. This allows you to bid a price, but then have a cap if you need to escalate over the next highest offer. Consider that one. That is very strong. Gap coverage, appraisal gap, the difference between the sale price and the appraised price sometimes is different. You can eliminate risk for your seller by saying, hey, I'm going to cover a gap. If it appraises short, I'll cover you up to $5,000. I'll cover you up to 10. I'll cover you to whatever it is. That's risky, but depends on how bad you want the house. Also, limiting or skipping inspections. Got to be careful with this. The newer the house is, the easier it is to skip inspections. You less exposure on something like that versus something that's much older. Basically, what you're trying to do is make an offer that the seller can't refuse, because if you're up against 4 or 5 offers, it takes a lot to stand out. So sometimes a combination of these things will get it done. Okay? Talk to you later. See you on the next one. Hi, I'm David Campbell with Coldwell Banker, and welcome back to another Difference with David video. This one I want to talk briefly about what closing protection coverage is. This is some insurance you're going to be offered at the closing table by the title company. It's from the state of Ohio. It's designed to protect you against the title company misappropriating your funds. That has happened in the past. It's kind of rare, but in essence, you're writing a check for a little bit of coverage. Most people don't get it. You want to know more about it. I'd love to speak to you about it, explain it a little more in depth. David Campbell with Coldwell Banker. Hope to talk to you soon. Hi, I'm David Campbell with Coldwell Banker. Thanks for tuning in to another Difference with David video. Today I wanted to talk about dual agency. I'm oftentimes asked about dual agency and how it affects things. And when you're a dual agent, you end up representing both the buyer and the seller in a transaction. And that can happen when you're the listing agent, and then here comes a buyer and they want to buy your listing and they don't have an agent representing them, so they ask you to do it. you can be a dual agent where you're working with both buyer and seller. It can be pretty awkward at times. It can lead to problems if not done correctly. Seller typically feels like the agent should owe them total allegiance since the seller is paying all the professional fees, the commission, in other words. The buyer can feel kind of, especially if they don't know you well, they can feel like, hey, this guy or gal must know the seller a little better and they're probably favoring that person. So that's where the problems can arise. Take a look at this sheet right here. And this is the basics of the dual agency. I underlined a couple things there. It says, as a dual agent, the agent shall not advocate or negotiate on behalf of either the buyer or the seller. Shall not suggest or recommend specific terms, including price and da-da-da. So that's the limitation of being a dual agent. You end up not being an advocate for either one, being neutral in the transaction. So my personal policy is to not practice dual agency, but I have at the same time helped plenty of buyers and sellers purchase a property with just me only in the transaction and get them to the closing table with everybody being happy. So if you want to know more about that, love to speak with you. David Campbell with Coldwell Banker. Hi, I'm David Campbell with Coldwell Banker coming at you with another Difference with David video. This one's about owner's title insurance. What is it? It's a insurance that can protect you against things not of record. You've done a title search, you paid for that, but things can still creep in there that wouldn't come up on a title search, like a forgery, a deed by a minor, a deed by somebody of unsound mind. These are things that can come up later. Aside from that title search. So you don't want to try to figure out if you want this product while you're writing your offer. It might be too late in a hot market. So do your research ahead of time, talk to your agent, talk to your lender, and figure it out. I'm also always available for questions. David Campbell with Coldwell Banker. Thanks for watching. Hi, I'm David Campbell with Coldwell Banker coming to you with another Difference with David video, a little tip on home searching. I find that some buyers just kind of wear themselves out looking online for properties. They go to Realtor.com, they go to Zillow, they go to individual agent websites, they go to individual company websites. The fact of the matter is all the listings are coming from a single source, and that's dabr.com. You can go there and find them. You can have your agent set you up on an automatic portal that shoots them out to you as soon as they get listed, or you can stick with your favorite one, Zillow or Realtor, whatever it is, but they're all coming from one source, so don't wear yourself out looking everywhere. If I can help you with anything else, be glad to do that. David Campbell with Coldwell Banker. Thanks.